Good morning. My name is Marian A. Alipudin, one of your students from MBA 104. Today, I will be discussing the fifth topic, which is the tax environment in Canada. We're going to discuss the personal tax. So, majority of the tax are coming from personal income tax. Most of the provinces and territories are collected by the federal government except Alberta and Quebec. They must also file T1 tax and benefit return for individuals. Federal income tax is administered by Canada Revenue Agency or CRA. So the important dates for filing taxes is every April 30th or June 15. There are also different types of payments. They can pay either tax through deductions, installments, payments during filing, and arrears of payment. Have an example or a simple computation for personal income tax. So based on the table, the individual have a $60,000 annual income. So I've also got the table from Alberta. The gross income for tax purposes, which I've mentioned, the total taxable income. For the total payroll deductions, these are the exemption to the computation of the tax. So the third and the fourth, they are the federal and provincial tax due. That is amount that needs to be paid by the individual to set the limit and the percentage to be collected. Next slide is a more detailed explanation as to how they computed the federal tax. So the individual has 60,000 annual income. The federal tax that needs to be collected from 0 to 45,282 Canadian dollars has 15% rate tax. So which has a total of $6,792.30 to be collected. And from 45,282 to 90,563, the tax rate is at 22%. So you need to subtract the difference between the total earnings minus the second bracket. So the difference is 9,718. So the amount that needs to be collected or paid by the individual is $2,137.96. So the total amount that the individual needs to pay is $8,930.26 out of the $60,000 annual income. Next, this is the computation for the province of Alberta. So if the individual earns $0 to $125,000 in a year, the tax rate would be at 10%. So since the taxable income is only 55,000, the amount that needs to be paid would be 5,500 Canadian dollars. Next, we do have corporate tax. So this includes taxes on corporate income in Canada and other taxes and levies paid by corporations to various level of government in Canada. This includes capital and insurance, premium taxes, payroll levies like employment insurance, Canada Pension Plan, Quebec Pension Plan, and workers' compensation, property taxes and indirect taxes such as good and service tax, and sales and excise tax levied on business inputs. Corporations are subject to tax in Canada on their worldwide income if they are resident in Canada for Canadian tax purposes. Corporations not resident in Canada are subject to Canadian tax on certain types of Canadian resource income. So that is based on the Section 115 of the Canadian Income Tax Act. Companies and corporations pay tax on profit income and on capital. Tax is paid on a corporate income at the corporate level before it is distributed to individual shareholders as dividends. A tax credit is provided to individuals who receive dividend to reflect the tax paid at the corporate level. This credit does not eliminate double taxation of this income completely, however, resulting in a higher level of tax on dividend income than other types of income. Next, they must also file a T2 income tax return. So, this has a different due date. The due date to file the corporate income tax return is 6 months following your corporation's year end. So, for example, your corporate or your corporation's year end will be December 31st. So, after 6 months, the return is due by June 30th. So for the types of payments, existing corporations are required to pay tax by installments throughout the year if their income tax bill is more than $3,000. New corporations are exempt from the installment requirement in their first year. So if there are penalty for the remaining taxes, late is 5% of the unpaid amount and 1% per month on any past due amounts. So, for example, a tax bill of $10,000 can result in penalty of $500 if remitted late. Next, we do have a simple sample computation for corporate tax. For example, the corporation has a total income of $300,000 operating in Canada. If they are not registered in small business deduction, their rate is at 15% for federal, which is at 45,000, and a provincial tax of 12%, which has 36,000. So the total tax that will be collected will be 81,000, which is 27% of the $300,000 worth of income. So the net income of the company would have 219,000 or 73% of the total. On our next slide, there are other forms of business that has the access to the small business deduction. So the next table shows that the company is registered in a small business deduction. So if you notice, they have lower rates. For federal tax, it has 10.5%, while on provincial tax is at 2%. So out of the $300,000, the amount that needs to be collected from federal tax is 31,500 Canadian dollars, and for provincial tax, it's at 6,000 Canadian dollars. So below, the total tax that needs to be collected would be 37,500, which is at 12.5% combined federal and provincial tax. So the net income or the income after taxes would have a total of 262,500 or 87.5% of the total annual income. Our next slide, there are other forms of taxes that the federal and provincial are collected. They have capital gains tax, excise tax, inheritance tax, harmonized sales tax. They also have medical tax, goods and services tax, luxury and sin taxes, municipal tax, payroll taxes, sales tax, and income tax from personal and corporate. Next, they also have RRSP, or the Registered Retirement Savings Plan. So this is a type of Canadian account holding savings and investment assets. So they were introduced in 1957 to promote savings for the retirement by employees and self-employed people. So deductible RRSP, or deductible Registered Retirement Savings Plan contributions, can be used to reduce their taxes. So in summary, the taxes that are being collected are important for the growth of the country. Though individuals, partnerships, cooperatives, and corporations are paying, they are also getting benefits on some other ways in order to help their business. I hope you learned something again today. Thank you for listening.